Ladies and gentlemen, welcome back to the channel. Here in this video, we will discuss Tesla stock and if we could see a short squeeze into year end. Now, that seemed like the most likely path forward, at least before the Fed. The Fed kind of threw a curveball that nobody was expecting. It was almost like a black swan event, okay? And Tesla, as a consequence, had a really bad day yesterday and had another bad day today. Now, whether or not we actually get a short squeeze, we'll talk about it. But what could be coming next regardless? Because I think a lot of people, they're a little panicky right now, when in all reality, nothing changed for Tesla. Okay? The bull thesis was not derived on the Fed cutting rates next year. Like, that was not the bull thesis for Tesla. It had nothing to do with the rally in Tesla stock. Not one single time did I mention Tesla's moving higher next year because of rate cuts. Never once. It's the robotaxi, it's the semi, it's lower, cheaper price Teslas, it is an acceleration in growth, and all of these other things, but it was never the Fed cutting rates. Now, I think the markets are in a pretty interesting position right now. From the standpoint of the VIX just soared, your fear just skyrocketed yesterday, and the last time that happened was August 5th. In fact, after August 5th, the markets went on a pretty remarkable rally. Now, the VIX obviously then hit like 65, okay? The NASDAQ was down at one point like 7% on August 5th. It ended up closing down only about 3%. Yes, there was a little bit more fear then than we had yesterday, but the markets did end up running 20% after that. Could this be another one of those situations? Because what tends to happen when you get a lot of fear that comes in at one time, it's hard to build on that because all of a sudden everyone's fearful. And that's kind of why you had the upset yesterday, because nobody was expecting what the Fed did and everyone was so bullish. And then that's why you got a 3% drop in just like 2 hours, okay? Because nobody was expecting that. So it does set us up in an interesting position for still a year-end rally. Now, here's the deal. Markets were in the green today. The advanced decline line, which basically tells you how many stocks were going up versus how many were going down as an aggregate number, actually fell today. So that means there was more stocks moving down on the S&P than moving up today. That's not great. Okay, that's not a great sign. It does seem like some of your big tech names really held the markets higher. Nvidia, Netflix, Google, Microsoft, Amazon, Meta, and Apple were all in the green today. So take those names out, and the markets would have had another bad day. And that's kind of the same trend that we have been seeing. I mean, if you look at the RSP, the equal weight S&P, you were again red today. And you've seen so much carnage here day after day after day. I mean, the RSI and the RSP is 23. What are the odds that you could start to see some stabilization? Maybe even a bounce here. God forbid we get a bounce. Look at all these red candles in a row. It's kind of crazy, right? As things get so bearish for the rest of the markets, the odds of a relief rally become higher. And that is certainly a possibility into the end of this year. Now, Tesla had a really bad day today, okay? I think a lot of Tesla's, specific bad day is some of those short sellers trying to, again, beat the stock down. You've gotten such a large rally. Short sellers have really been punched in the face here, and they're trying to take some of that back. Also, some of your short-term traders, some people that were just in Tesla because it was going higher, are kind of getting out of some of those positions today, it seems like. But if we do get a broader market bounce, then I think it's going to be pretty pretty unlikely that Tesla continues to fall in that scenario. Now, we may not get a broader market bounce. I mean, it's certainly possible there's no bounce. It's certainly possible we head into a larger correction and big tech gives up. But as you're this fearful, the odds of a larger market-wide, bounce or stabilization become larger. So following yesterday's decline, the odds are greater now of a recovery in the broader markets, at least to some degree. Here on the day today, as far as the option activity for Tesla, you had 258 different trades totaling $237.56 million with a positive order value of 77%, which was a little bit lower than what you have seen recently. And again, you still have this massive short position on Tesla, still worth $34.2 billion. And I don't think the thesis that I had changed from that perspective. I don't think any normal, logical hedge fund manager wants to carry their Tesla short position into 2025, right? Nothing changed yesterday that says Tesla's going to have a bad year next year, right? There's no signs of that. If anything, there's signs that Tesla's going to have a really good year next year. Okay, even down to some of the news that we got today, in which I was surprised that Tesla had a bad day, because there was news that Tesla is in talks with local authorities in Austin, Texas, about their robotaxi operations, or really about bringing their robotaxi operations to Austin, Texas. So I'm a bit surprised by the move that we're seeing today, and based on that news, and it wouldn't surprise me if you get a bit of a recovery once the markets realize that, oh crap, Tesla's really going to launch the robotaxi in Austin, Texas. So weirdly enough, as long as the markets do not crash into year end, as long as you get a stabilization, if you will, in the markets, then I would think that is also the case for Tesla. And I would think you revert back to your first basic principle of, do you want to be short heading into 2025? And I think the clear and obvious answer is no, you do not. Even after today, yes, the stock down, you had 1.5 million shares that actually covered on their short position. They're taking this opportunity in the 420s to cover on their short position. If Tesla can rally to the upside again, can get some investors excited again, I think you're going to continue to see short sellers opt to get out of those short positions into year end. The question really is, do you get the gamma squeeze that comes back? Do you get investor sentiment that comes back? And does that feed into a larger short squeeze? Because I think shorts are going to cover regardless heading into year end. But do you get those other factors that also play in a positive way, right? If you get a gamma squeeze as well as a short squeeze and people just outright, bullish on a stock, that's where you get explosive moves to the upside. And I think that's the question here. I think you're going to get shorts covering, but does it get reflected in an actual short squeeze? I think that's going to come down to investor sentiment, what happens in the broader market, as well as do we see a gamma squeeze or not, like we have been seeing recently. Now, let's take a look at the option activity on the options chain that we seen today. And if you look at next week's expiration, you have definitely seen some of the volume die down, at least a little bit today. At the 425 call, yes, these options are $1,700 a piece. Keep that in mind. You have 2,240 for volume. At the 430 call expiring next week, you have 3,600 for volume, 10,000 for volume at the 440. That's still a $1,000 option, $1,100 option. That's very expensive. At the 450 call expiring next week, you have 21,000 for volume, so that's definitely a little bit higher. At the 480 call, you have 13,000 for volume, and at the $500 call, you have 37,000 for volume today. So that actually looks pretty good for these next week options. If Tesla can get a little bit of stabilization, even coming into tomorrow with some of the data that we have, it looks like some people are positioning for a move potentially to $500 by next week. I mean, 38,000 for volume on an option, that is almost 20% out the money is some pretty aggressively bullish behavior. Now, again, like I said at the beginning of this video, the CNN Fear and Greed Index is at 29. So you got really bearish just within the last 2 days. So when you get this bearish from a sentiment perspective, it doesn't take a lot to get a bit of a reversal there. Kind of like when you get super bullish, doesn't take a lot to get a reversal to the downside. And sitting at 29 here on CNN's Fear and Greed Index, almost in extreme fear, with almost every category here being in fear or extreme fear. Yeah, I mean, that's something to definitely consider. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, greed. Market volatility is neutral. Safe haven demand is fear. And junk bond demand also in fear. Now, what I will also point out today is the VIX was down about 15% today after hitting that high yesterday of, it was like 27, 28. Okay, so that was a massive jump from really like 13, 14 up to that 27, 28 level. And then now you're back down to about 23 and a half, which is still very elevated. So if things don't continue to progress and get worse from here, you're going to see that fear die down a bit. The VIX doesn't tend to stay at these high levels for a long time, and that could fuel at least a decently better market. I mean, the market doesn't have to go back to being insanely bullish, but just seeing some fear die down could be a positive for our markets. Now, as far as today's economic data, you did have initial jobless claims that came in lower than expected at 220,000. Expectation was 235,000, so that was good. Philadelphia Fed Manufacturing Index came in at negative 16.4. Estimate was positive 3, so that really just plummeted. Core PC prices quarter over quarter came in a little bit higher than expected at 2.2%. We were expecting 2.1%. Continuing jobless claims came in lower than expected. Philly Fed business conditions plummeted from 56.6 down to 30.7. CapEx index plummeted as well, down to 18.80. Employment came down to 6.6. New orders went negative to negative 4.3. And prices paid came in higher than expected, that inflationary component of the Philly Fed report today. So that was not great. Existing home sales came in higher than expected. From a headline basis and on a month-over-month basis. So some very weird data that came out today. Kansas Fed Composite Index came in at negative 2. We were expecting positive 5, and manufacturing came in at negative 4, expecting positive 4. So some very weird data that we got today. Not great data, so it really makes you question what the Fed is even doing at this point. Now, tomorrow we get PCE core month over month, expecting 0.2%. 0.2% would be a good number because last month was 0.3%. If it comes in even lower than 0.2%, maybe a low 0.2 or a high 0.1, that would likely be positive news for the markets. Now, personal income month over month, I don't think this matters too much, is expected at 0.4%. And personal income or personal spending month over month is expected at 0.5% versus 0.4% last month. So you are going to get some important data tomorrow, and that's the next catalyst markets will be reacting to. Also, just to kind of add to this whole narrative that markets may be a little bit too on the negative side of things, the percent of stocks trading above their 50-day moving average is at 32.21%. Yesterday, it hit a low of 31.5%, which is getting down to some pretty extreme levels. Typically, once you get down to these levels, markets are down like 7 to 8%, right? You're at pretty much or near correctionary levels. So I think the market sentiment just within 48 hours, and really this has been happening ever since like November 25th. So really since December or so, you've seen some of your market internals starting to weaken. But really after yesterday, that was like the blowout, right? And typically when you get a blowout, you can get some pretty sharp recoveries as well. Now, if we do see a sharp recovery, now that's going to be really good for Tesla. Again, there was good news today for Tesla that the markets seem to ignore. So I think the latest rally we've seen with Tesla since the election doesn't necessarily have to be over with, depending on what happens to the broader markets. Tesla tends to have a high beta, so a lot of stocks are doing poorly today, so Tesla's doing poorly. There's really only a handful of stocks that are doing good today, and they are your other big tech names. And Tesla's been far outpacing those other names, so now some people, might be opting to trade those stocks instead of Tesla, draining some liquidity out of Tesla. But as we previously explained, there's a lot of shares that are still sold short. I still think it makes sense for shorts to cover on their Tesla short positions into the end of this year to not take that loss into 2025. And you are seeing some pretty interesting option activity for next week, specifically around that $500 call, which is almost 20% upside from current levels. So whether or not we get to $500 per share by next week, obviously I don't know. That's a 17.8% move higher. But again, as I even said in the last video, I wouldn't count out a rally for Tesla. It's just a little bit more difficult now. That's it. It's just a little bit more difficult because you did take that blow, to the chin, and Tesla got stunned a little bit from that drop that you seen yesterday as well as today. But I think it makes it a little bit more interesting for Q1 because I've been calling for a correction in Q1, but the markets are already very fearful right now. So, how much more fearful are they going to get? Could that correction come later into Q1 instead of January? Could that be more of a February, March thing, considering, the spike in the VIX and the weak market internals and really the lack of enthusiasm you have right now in markets? It's an interesting topic, interesting debate. I honestly don't have a clear answer on that, but I have gotten a little bit more positive on at least the start of 2025 because markets are now this negative. And a short squeeze is still certainly possible for Tesla. I think it's going to happen regardless. Question is, do we get a gamma squeeze? Do we get excitement and enthusiasm that comes back into Tesla? That's a big question. And I think these levels in the 400s are going to be critical. Again, around that 430 level, do we kind of hold support in that rough range? Do we fall back to that 414 level, our previous all-time high before? There was a lot of volume that came in then. People like to trade new all-time highs. So do we hold that level? Do we hold a 400 level, around just 400? These are questions. If we can start to bounce at some of these key levels, then that's going to start to look better for Tesla. You have reset your momentum indicators, that's for sure. The RSI is at 62.2. So although you've rallied a lot still, and you've really only given back just a couple of days worth of gains for Tesla at this point, you've reset the RSI to a normal level. You're no longer extremely overbought like you were just even yesterday. So again, let me know what you guys think about this information down below in the comment section. I like buying the shares here. I don't like the options, just to be clear. And I haven't sold any of my long-term position in Tesla. This is one of those stocks you don't want to regret not owning or buying 10 years from now. And that's kind of the way that I look at Tesla. The risk of regret is too high for Tesla because of the businesses that they are in that could be revolutionary to the world. So longer term, nothing to worry about. Short term, did take a bit of a blow, but the thesis remains the same. So let me know what you guys think about this down below in the comment section. Do you think we still are going to have a year-end and first, week or so rally in January? There is something called the January effect, where you do tend to see stocks rally in the first half of the month of January as well. So let me know your thoughts on that down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.